Welcome to the Deep Dive. Today, we're going to be diving into Dixon Technologies and their recent Q3FY25 earnings call.
Yeah?
We got the transcript right here.
Looking forward to this one.
And you're not going to believe some of the ambitious plans these guys have.
Yeah, they're really trying to ride that
They're not just riding the wave.
India electronics wave.
They're trying to become the tsunami.
Yeah, they're trying to be the whole ocean at this point.
The whole ocean.
It's pretty wild what they're trying to do.
So, I mean, what's fascinating is how they're going about it.
Yeah.
I mean, they're racking up some impressive customer wins, and they're not afraid to take some risks, especially when it comes to expanding their capabilities.
Definitely not a company that shies away from a challenge.
No.
Which is pretty interesting to see.
So, okay, let's unpack this a little bit, starting with their bread and butter. Mobile phones. I mean, they produced a whopping 8.3 million smartphones this quarter alone.
Just smartphones.
And that doesn't even include their Samsung production.
Yeah, that's right. And it's really striking that they're working with the top 8 brands in the Android ecosystem.
Wow.
Which is incredible.
But they're just everywhere.
They are.
In that market.
They are.
Yeah.
They're aiming to hit 40 to 45 million phones next year.
Wow.
And eventually 60 million.
So essentially, it sounds like they're trying to produce the majority of phones that are going to be sold in India.
Yeah. And to put that into perspective, that's like 65 to 70% of India's outsourced phone production.
Wow. Talk about market dominance.
Yeah, it's...
But it sounds like they're putting their money where their mouth is, too.
Oh, yeah, for sure.
I mean, they're investing heavily in automation and robotics to boost efficiency.
Absolutely. Got to do it if you're going to play at that level.
Yeah.
Got to be able to scale.
Got to be able to scale.
And they're doing that through automation and robotics.
Now, they're not just focused on churning out phones, though.
Right.
They're bringing in some exciting new clients, too.
Absolutely.
They snagged Nothing Phone, and they've expanded their work with transcend brands like Infinix Techno and itel.
Right.
Even landing a 3 million unit export deal for African markets.
Yeah, huge.
So they're not just content with conquering India. They got their sights set on global domination.
Yeah, exactly.
And to support all this growth, they've invested INR 133 crore.
Yeah, a lot of money.
In land buildings, plants, and machinery.
Yep, got to build it if you want to, make all these phones and do all this production.
Now, while they're chasing these new opportunities, they're not neglecting their existing clients either.
Right.
I mean, they're still churning out over 1 million Motorola phones every month.
Yep, just churning them out.
And their order book is looking very healthy with a good mix of export orders in there, too.
Yeah, that's right. They've got...
So they're not just focused on India. They're getting that global revenue stream going, too.
Yeah. Gotta diversify, Can't rely on one market too much.
Right.
Especially in this day and age.
Right.
So, yeah, they're doing a good job of spreading their wings, so to speak.
They've also got increasing volumes with Xiaomi and a decent order book for Oppo.
Yep. Gotta love those Chinese brands.
Plus, they just finished their first production run for a major global brand through Compal.
Right.
Which is a big deal.
That is a big deal.
That's huge.
Yeah. Anytime you can get your foot in the door with one of those big global brands,
right.
That's a big win.
And this is just the beginning.
It is.
They're not done yet.
Oh, no.
They've inked a binding term sheet with Vivo
right.
for a proposed joint venture where Dixon would hold the majority stake
and
manufacture Vivo's smartphones right here in India.
Exactly.
Hold on, there's more.
There's always more with Dixon.
These guys are on fire.
Yeah, they're not slowing down anytime soon.
Remember those export ambitions?
Right.
Well, they're not stopping at shipping finished phones.
Yeah.
They're planning to start manufacturing display modules right here in India through a partnership with HKC.
Yeah. Huge move.
So they're going even deeper into the supply chain.
Exactly.
That's a smart move.
Yeah. Yeah, you got to control as much of the process as you can
right.
to really maximize those margins.
Exactly.
And they're aiming to start production in the first or second quarter of next financial year.
So that's coming up quick.
It is.
This could be a game changer for India.
Yeah, potentially reducing their reliance on display imports.
So now, didn't I hear something about an even bigger play?
You did.
Something about building a display fabrication facility.
You heard right.
Okay.
They're in discussions with a global tire partner
to
set up a world-class display fab right here in India.
Okay.
This is where things get really interesting.
This sounds like a massive undertaking.
It is.
So what kind of resources are we talking about here?
We're talking a potentially $3 billion in capital expenditures.
Wow.
But the potential returns are huge, too.
All right.
They're estimating $1.7 to $2 billion in revenue with decent operating margins.
Wow. Those are some serious numbers.
They are.
But this kind of project comes with a lot of risk, right?
Absolutely. The technology is complex. It's constantly evolving.
Right.
And they're relying heavily on the Indian government to roll out its ISM 2.0 policy, which would provide crucial financial backing for this venture.
So if I'm understanding this correctly, Dixon's strategy seems to be kind of two-pronged, aggressive expansion into new markets and product lines.
Right.
And a bold move to deepen their manufacturing capabilities with this display fab project.
You got it.
Okay.
And it's important to note that this is all happening against the backdrop of a potentially softening market.
Okay, so let's dive into that a little deeper.
All right.
What are the specific challenges that Dixon might face, and how are they preparing to navigate them?
Good question. Well, first off, consumer demand might not be as robust as it has been.
Okay.
People might hold back on buying new phones or appliances if the economy slows down.
Right, makes sense.
So, diversification's key here.
Yeah.
They're not putting all their eggs in one basket.
Okay.
They're expanding into new segments like laptops and IT hardware. Their new facility in Chennai is almost ready to go, and they've already started mass production for Lenovo.
Oh, wow.
They'll be making laptops for HP and Asus soon, too.
So even if phone sales take a dip, they'll have these other revenue streams to kind of cushion the blow?
Exactly. That's the idea.
Okay.
You're going to have multiple irons in the fire.
Right.
You can't just rely on one product or one market.
Right.
And they're taking a similar approach to IT hardware as they are with phones, partnering with the big players and scaling up production quickly.
Okay.
They're even in talks with a major original design manufacturer, or ODM.
Hold on, an ODM.
Yeah.
For those of us who aren't fluent in manufacturing jargon, can you explain what that is?
Sure. An ODM is basically a company that designs and engineers products.
Okay.
And they often handle the manufacturing, too.
Okay.
So think of them as like the brains behind the operation.
Okay.
So by partnering with an ODM, Dixon can tap into their expertise and potentially expand into even more product categories.
Oh, so they're really trying to cover all their bases here.
Yeah. They're not leaving anything to chance.
That's a pretty savvy move.
It is. It shows that they're thinking long term.
Okay.
And don't forget about their consumer electronics segment.
Right.
While TV sales have been a bit sluggish, their refrigerator business is booming.
Oh, wow. Okay.
They've already captured 8% of the Indian market in the direct cool category.
Wow, that's impressive.
And they're just getting started.
Yeah, I remember when Dixon was just known for assembling TVs.
Right.
It's incredible how much they've diversified their portfolio.
It is. They've really transformed themselves into a major player in the consumer electronics space.
Okay.
And they're expanding their refrigerator capacity and adding new product lines like deep freezers and even side-by-side refrigerators.
Oh, wow. Okay, so they're going all in on the refrigerator market.
They are. They see a lot of potential there.
Okay, so they've got a plan to deal with this potential market slowdown.
Right.
But what about the risks associated with this huge display fab project?
Yeah.
I mean, that's a whole different ball game.
It is. It's a massive undertaking, and there are a lot of things that could go wrong.
Okay.
First, there's the technological risk.
Okay.
Display technology is constantly evolving.
Right.
What's cutting edge today might be obsolete tomorrow.
Right.
So Dixon needs to stay ahead of the curve, and that requires constant innovation and investment.
So they're going to have to be nimble.
They can't afford to rest on their laurels, and then there's the financial risk. We're talking $3 billion.
Right.
What if they can't secure enough funding?
Right.
What if the project goes over budget?
Yeah, that's a lot of money.
It is. And as we mentioned earlier, they're relying heavily on government support through the ISM 2.0 policy.
Right.
If those incentives don't come through, or if they're not as generous as expected, it could jeopardize the entire project.
So they're taking a calculated gamble.
They are.
High risk, high reward.
Exactly.
Yeah.
And let's not forget about the execution risk.
Right.
Managing a project of this scale is incredibly complex. They need to coordinate with multiple partners.
Right.
Manage a huge workforce and ensure that everything runs smoothly.
Yeah, it's a lot of moving parts.
It is, and any hiccups along the way could lead to delays and cost overruns.
So even if they get the funding and the technology right, they still need to execute flawlessly to make this project a success.
They do. There's no room for error.
Okay.
And all of this is happening while they're also trying to manage their existing business and maintain their impressive growth trajectory.
Right. They can't lose sight of what they're already doing well.
Exactly. Got to keep the lights on.
Right.
Their operating margins have dipped slightly.
Okay.
Partly due to the lower margins associated with their mobile phone business.
Right. So they're walking a tightrope.
Yeah.
They need to keep growing, They need to keep innovating, and they need to manage their costs very carefully.
Exactly. It's a delicate balancing act.
It's a lot to juggle.
It is, but they're taking steps to address these challenges.
Okay, like what?
Well, for example, they're investing in backward integration.
Okay, back up a second.
Sure.
What exactly does backward integration mean, and how's it going to help them?
So backward integration basically means they're moving further up the supply chain.
Okay.
By making more of their own components instead of buying them from other companies.
Okay.
So this gives them more control over their costs and their supply chain, which is crucial in today's world.
So instead of relying on other companies to provide them with parts, they're going to start making more of those parts themselves.
Exactly.
Rough.
It's all about vertical integration.
Okay.
Controlling as much of the process as possible.
So by making more components in-house, they can potentially lower their costs and improve their profit margins.
Precisely, that's the goal.
Okay.
Plus, it gives them greater flexibility and reduces their reliance on external suppliers.
Makes sense.
So it's a long-term strategy that could pay off big time, especially if they can pull off this display fab project.
Okay, so to sum it all up,
Yeah.
Dixon's facing a number of risks.
Right.
A potential market slowdown.
Yeah.
The complexities of building a display fab.
Right.
And the challenge of maintaining their financial performance while managing this rapid growth.
Exactly.
But they're also taking proactive steps to mitigate these risks.
They are.
By diversifying their portfolio, investing in backward integration, and partnering with key players in the industry.
That's a good summary.
Okay.
And, there's one more crucial element we need to consider when assessing Dixon's prospects. Their order book.
Right. The order book, that's the lifeblood of any manufacturing business.
It is.
It tells you what kind of demand they're seeing and what their future revenue stream might look like.
Exactly.
So let's dive into that and see what it reveals about Dixon's future.
All right, let's do it.
Okay, so let's talk order book. What's the outlook like for Dixon?
Well, their mobile phone order book is looking quite strong. They're expecting to hit around 30 million units by the end of this fiscal year, and that's not even factoring in the potential volume from their joint venture with Vivo.
So even with a potential market slowdown, they're still seeing healthy demand for mobile phones. That's reassuring. What about their other segments?
Yeah, they're projecting even more growth in mobile phones next year, aiming for 40 to 45 million units. And remember, those numbers are just for the Android ecosystem. They haven't even touched the Apple market yet, which represents a massive opportunity if they can secure a partnership there.
Right, that would be a game changer for sure. But let's not get ahead of ourselves. What's the order book looking like for their other products?
Their telecom and networking products division is also seeing a lot of momentum. They've quadrupled their revenue in that segment compared to last year, and they're planning to double their capacity to keep up with the demand for 5G products.
Wow, that new Noida facility they opened in November must be buzzing with activity.
It is. They're seeing strong orders for 5G FWA products both domestically and for export. It's remarkable how quickly they've scaled up this segment.
They're also seeing a healthy order book for their wearables business, which is another high-growth area. It seems like they've got a finger in every pie these days.
Yeah, they're really diversifying their portfolio, and it seems to be paying off.
So taking all of this into account, what's the big takeaway for our listener? What does Dixon's order book tell us about their future?
I think it paints a very optimistic picture. Despite the challenges and risks we've discussed, they're clearly seeing strong demand across multiple product lines. Their order book is full, and they're making strategic investments to expand their capacity and capabilities.
So they're not just talking the talk, they're walking the walk. They're backing up their ambitious plans with concrete actions.
Exactly. And that's what makes them such a fascinating company to watch. They're ambitious, they're agile, and they're not afraid to take risks. Whether they can pull off this massive display fab project remains to be seen, but one thing's for sure. They're a driving force in India's electronics manufacturing sector.
And they're a company that's clearly thinking big and playing for the long game. This has been an incredibly insightful deep dive. Thank you for walking us through all of this.
It's been my pleasure. And for you listening out there, keep an eye on Dixon Technologies. They're a company that's going places.
That's it for this deep dive. We hope you found it informative and engaging. Until next time, keep learning, keep exploring, and keep diving deep.